Today is technically May 1st. It say April 30th on my computer. Technically, it is May 1st though, right? You know, tomorrow is the first day of a new month, and it's already tomorrow in the Forex markets. You feel me? So, happy May. You know, today's May 1st, 2023. And we gonna go ahead and get this weekly market outlook popping. I mean, it's a special weekly market outlook though, because it's not just a weekly outlook. It's a monthly outlook. Cause like I said, it's a new month. So we gonna go ahead and look for a couple specific things I like to look for at the top of the month and pay attention to at the beginning of the month, just so that, like, you know, same reason that we have a weekly market outlook, so that as the days go by, I'm responding to my plan and the areas that I already had in mind, and, you know, of course, reacting, but at the same time, same thing on a monthly level, right? Like going into each week kind of allows me to be a little bit more confident about my bias on that specific day or in that specific week, because I have specific things that I was able to identify on a higher time perspective. You feel me? So that's what we're gonna go ahead and get into today. First, we of course gonna start off with investing.com. We definitely gonna start off with the news. Let me make this do not disturb. I might need to grab my charger. But we're gonna, whoa, crazy how that just went down. All right, so I need to switch this, and we need to go to the internet. All right, so we are on investing.com. We're gonna go ahead and check out some of the news for this week. And I mean, you know, another thing I want to say is, like, you know, I hope I don't know if you guys have ever heard to do, like, listen to like binary beats in the background, like when you trading or when you're like on the charts or anything like that. But it can be binary beats, it could be meditation music, it could be your personal type of music that makes you happy, whatever the case is. I highly suggest, you know, giving yourself, you know, scheduling time in, just like we have a market weekly outlook, scheduling a time in at the beginning of each day, or the beginning of each trading session, whether it's 15 minutes, whether it's 30 minutes, whatever the case is, you know, like where you kind of get into your zone. You want to create some sort of like operant conditioning with yourself, you know, when it comes to the way that you trade. You really want it to be monotone. You want it to be boring, in the sense that it should be the same process every day. So, you know, I know everybody, you know, you probably do or don't, right? Because this is recorded as well. So you may or you may not have a morning routine, but the same way that you have a rising routine, you'd like to have a trading routine. You feel me? Something that's going to get your mind right, or put you in that consistent state to perform. Like right now, I'm watching the, you know, NBA playoffs. Not right now, but like in this time of the year, the NBA playoffs is going on, and I love sports in freaking high intensity like times, you know, like finals and playoff situations where the best of the best come out, because people play different, you know, people move different when it's the games are on the line and things of that nature. The reason I bring that up is because you get to see masters at work, right? There's a book I've recommended several times. It's called Mastery. If you've already maybe read Happy Money, for Power of Now, those are two I always recommend. I would definitely recommend getting the audio book or getting the book Mastery by Robert Greene, right? Because, you know, going back to the whole sports analogy, I love watching these times because you're watching the people who are masters in their field, right? They're excellent. They show up consistently, like year over year. A year goes by, 5 years, 10 years, 20 years at the same level of excellence or higher. And just by studying them, you'll notice they have a routine. They have a routine before the game. And the guys who dominate and the guys who are putting the numbers up and who make the biggest shots and make the biggest plays in the game are typically at the court about, you know, an hour, 2 hours, 4 hours ahead of everyone else. And yes, they get time in for their routine, but when it's time for the playoffs and everything is on the line, you know, they showing up hours in advance so that they can get that practice in, or so that they can get into a rhythm, even though they only going to play for 45 minutes. Like, you might be on the charts for 45 minutes. You might be in a trade for 30 minutes, an hour, whatever the case is. But, you know, if you're at a point, you know, some people are at different places in their trading journey. You know, you got people who are on there, I'm trading for a living, or I'm trading every single day, or I'm like trading to make this happen. And then you got the people who are like they're factoring it into their life. They're really learning. They're getting the skill set down, or maybe they're in an off season where they can't put as much attention on it. All right, cool, that's fine. But if you're in a whenever you're showing up, and especially if you're having to show up every single day or every single week for the style that you trade, you want to treat it like, okay, well, if this is that type of high intensity situation, how early can you show up, or how early can you prepare to get your mind into that right mindset so that you can get that same consistent result and be a master in this thing? You feel me? So shout out to y'all that's on weekly market outlook right now, because that means that you are on that mastery type of time. You feel me? Now, with that being said, first thing that I'm gonna go ahead and check out today, right? One of the things that is part of my routine, gets my mindset, straight, gives me a good idea of what's going on. And it's funny because the news, the way I use the news, has changed throughout my career, a lot of different ways. Now, going into it, looking at the news, it's not that I don't pay attention to the numbers. I do understand a lot of these numbers, and I've spent time learning how to understand a lot of these numbers. But at this point, I'm really just utilizing news for volume delivery, just knowing a time in which money is going to be poured into the markets. And because I know that, and I'm identifying areas where money want to come into the market, that's really the most important thing. The actual numbers I haven't paid attention to them in a few weeks, I'm not gonna lie. So that's transparency. But it's just different ways of using it throughout my career, or in somebody's trading strategy, right? Now, when I on here, I have my account with them. I've changed the settings for right now to only show us red folder news, aka 3-star news, and I'm only looking for Euro countries, USD news, JPY news, and I got CAD news on there, even though I don't really trade CAD like that. But sometimes CAD will get my attention, so I put it on there. So those are the only ones we're looking at. We had to go ahead and clean it up a little bit. You feel me? Somebody say something. Always grateful for God's clarity, yes sir. So Monday, as we see, May 1st. And I cut it down, like I said, May 1st. We got 10 a.m. news on US dollar. So I'll talk about that in a second. Tuesday, we're gonna have Euro news pretty much all through London session. We're gonna have Euro news at 4 a.m., 4:30 some pound news, and then more Euro news at 5, which is gonna be their CPI, actually, inflation. Okay, so that's some important news. Then we're gonna have US dollar news at 10 a.m. again on Tuesday. Am I right? Wow, why this has happened? This is the second month in a row we have FOMC and NFP the same week. Trade carefully, folks. We'll talk about that today. Right, Wednesday, May 3rd, we're going to be having a JPY holiday, Constitution Day. Look at that. Freedom in Japan. All right, 8:15 a.m., we're going to have non-farm employment change. For those of y'all that's not familiar, this ADP non-farm joint that comes before the non-farm payroll on Friday is a prediction, pretty much. It's like an estimated, basically, based off the numbers of ADP. And ADP is like one of the top, that's our payroll system. You know what I'm saying? So like majority companies use ADP to process their employees. So it's pretty much using from ADP's predictions. Then we got services PMI, okay, 9:45 a.m. Again, 10 a.m. news. I'm gonna talk about that, like I said, and then we're gonna have 2 p.m. news FOMC and 2 p.m. news interest rate, and then 2:30. So just remember, FOMC is a 2-part news event. You get the 2 o'clock initial event, and then you get the move that happens at the 2:30 when he opens his mouth. And just remember, for those of y'all that are interested, even though I just said I don't pay as much attention to the numbers, I do actually now pay a lot more attention to the notes and to the, whenever you see, like here it says a report, if you click on the name of the event and you go to it. Alrighty. I wonder if y'all can even hear me because this thing is taking forever to load. Okay, cool, we're good. So, and you go to it, it will show you the source, and you can actually click that source and pull up the actual report, right? Which is, right now it's not here because it comes out on Wednesday, but it'll be right here, just like March's is right here, and we can pull it up, right? We can pull up April or February's, okay? And the same thing for the conference, right? If I click it, it's gonna pull it up, and I'm gonna be able to click the source button. That's going to appear right where my mouse is. No, I'm foolish. It's down here. All right. So down there, and then it will actually take me to the Federal Reserve. Hey, it's gonna actually take me to the Federal Reserve YouTube channel, right? And this is the guy you're gonna be listening to if you hop on here. His name is Jerome Powell, one of the most influential voices in the market that you trade in. Okay, and as you can see, the last event was March 22nd. Before that, February 1st. All right, so yes, we're looking forward to this one that comes up, and the reason I tend to pay attention to it is because I listen to keywords, right? I mean, I listen to keywords. I'm listening to the hints that he's throwing out there when he's talking about the flow of money and the Federal Reserve's opinion on the flow of money right now, because they, that's something that's going to reflect very much on big money, right? Institutional, the way we like to trade on the side of the institutions, right? So Thursday, again, another JPY holiday. These folks they ain't got no work this week, I see. Okay, cool. So Thursday, we're gonna be having GBP news at 4:30, and then we're gonna have some EU interest rate decision is gonna be on Thursday. Interesting. And it looks like both the US and EU plan to raise interest rates, which is to be expected. I'm not surprised by that at all. So that's gonna be going down 8:50 a.m. And then 10 a.m. we're gonna have some CAD news. Euro president is gonna be speaking at 10:15 a.m. again. And then Friday, another Japanese holiday. These guys are living, right? Another Japanese holiday, and then we're gonna have GBP news 4:30 a.m., non-farm payroll 8:30, and CAD employment change as well at 8:30, and the unemployment rate will be dropping on Friday. Wow, 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 wow! What a week! What a sheesh! Let me stop. All right, but what a week! Like for real. So I'm, as always, going to say, watch your back on these FOMC and NFP, what I call manufactured news events, right? These are news events that are legitimately promoted and advertised. Like, traders live their whole life to trade NFP, like, to trade FOMC. There's people who literally just come into the market with all they can risk on those days because of how much they can gain to make. One of the biggest gambling events in the markets, right? So you want to be careful on those days. I tend to do my best to either trade prior to the session, right? So you got this FOMC event dropping Wednesday. I would be so happy to make my money. New York session, right? 10 a.m., 8:15. I would be so happy to make my money and have nothing to do with 2 p.m. That's me, right? Same thing for non-farm payroll on Friday, right? I would prefer to have nothing to do with it. I'd rather take a trade in London session or wait until after the news event passes, see what the body's looking like, or just not even trade the day altogether, right? But I prefer to get in and out of the market before the news event. That's how I be feeling, right? So that's what we got coming up this week. The other thing I wanted to point out that I've been paying attention, I've noticed this, like one of my mentors, he's consistently spoken about how 10 a.m. news events affect the market, and how typically, he'll stay out of the market till after 10 a.m. When those type of news events happen. But you know me, I'm the daring student. I'm the guy who's gonna be like, yeah, let me learn the hard way too. And so, not to say that there's no opportunities in the market before 10 a.m., but I have noticed, like, I'll, on a lot of days where there's late news events in the morning, like 10 a.m., 10:30, and knew I should have got my charger. 10:30, like I'll trade before it, I'll trade ahead of it, and I'll make money and lose money. I'll make money and lose money. And the move that I wanted will damn near always come back to my entry one more time after that 10 a.m. news event. So the whole point being that to reduce risk and exposure, I could have just waited until after the 10 a.m. news event. So you heard it here, folks. You heard it here first. You feel me? Don't even got to test the theory. I'm giving it to you straight. So that is what I've noticed, and we will be taking that into account for this week's trading plan. You feel me? Now, let me go ahead and don't remember I said it for me. I'm trying to give y'all advice. All right, let me go ahead and grab my laptop charger real quick. Get on Market Outlook Live, they said. He knows what he's doing, they said. Hold on, let me get my charger. It's comedy. It's comedy, I know. All my phones be dying. My laptop be dying. Damn gimbal be dying. Like, can I get more life in the crib? All right, bet. Okay, cool. All right, so it's time for the fun part, man. Let's get on these charts. And of course, we're gonna start off on the monthly time frame. A new month just started. Like, oh, look at that, 3019. I like that. I like that number. Mix. We're in for a good month, guys. We're in for a good month. Now, a couple of things I will point out on this chart. We talked about this last month already, where I pointed out on this chart, you can see out of this large move here, where we took to the upside, broke, created the highest highs we've had since 9/11. Okay. I feel as though there is a discount area that the market could prefer for buyers to be enticed into a little bit further down. And so we've been consolidating at the 50%, right? Notice, I just like, when I look at the charts, like, I really like to pay attention to context, not just technicals. It gives me a little bit more personal confidence in my bias, right? So that's why today and top of the month, top of the week, like, just sometimes don't even got to pull out the fibs and the trend lines and the lines first. Sometimes you just look and just take into context what's going on. So at the 50% since January, we dropped down back to the 50% of that move. We rejected away from it, right? Dropped back into it, closed right on top of it, opened below it. I believe we just traded back into it before we dropped again at the end of the month, right? And right at that 50%, right, we formed a bullish order block, right, which the market traded, we had a shot above it, and then the market engulfed that order block. So that order block has now honestly become resistance, right? Because we've traded back underneath it. As we can see, the current candle for the new month is it closed, right? We closed lower than this zone, right? This is now a lower low, right? If they would have just wicked down and we finished the month closing above, then I'd still be like, oh, okay, I mean, shoot, we could have just swept and then we could run off. And that could, you could argue that to be the point. But at this point now, we have this order block, right, which was then engulfed. So now this bullish candle has become a bearish order block. We got a whole lot of action happening in this area, right? So that's one thing that kind of catches my attention first and foremost, right, is the way that we've now created a bullish bearish order block here with this up candle, and we've closed below it, and trading back into it, right, is where I'm looking to see potential bearishness and opportunities. And remember, I'm on the monthly time frame right now, right? So let's go ahead and on this new chart for the week, let me see, do I rather use this chart? And I'm gonna point out some things about these charts today too, about these DXY charts, man. The reason it's important to sometimes look at multiple different brokers and reports. We gonna get it popping. I need to delete this orange line. It's bothering me a little bit. It's not an orange line, it's an alert. But okay, cool. So this here, actually, we are gonna use the other chart. Dang, I got alerts on every DXY chart. Boy, it's not missing a move. All right, so it's the same pair. All right, so boom, right? That is the bottom, the open of this up candle, right? That's our top of our order block. So we'll go ahead and say monthly bearish order block. highlight the candle just so everybody's on the whoa. Talk about making a statement. Just so everybody can be on the same page as to what we're talking about. We're talking about this all white candle here is now our bearish order block, right? We have bearish price action and we have a block on that price action where the price shot back up and then we traded and engulfed underneath that. So this is now a strong form of resistance for us to reject off of and trade higher from, right? Kind of like, kind of like here when the market opened up, created the order block, next monthly candle traded back down into that, and then we got a strong move away from it, right? And because we're on the monthly time frame, remember. Same thing here, right? Formed a bearish order block here, traded back up into it, dropped there, traded back up into it. We did give a drop, closed back below there, acted weird. So yeah, that's what we're looking at right here. Now, with that being said, and then also was pointing out this small guy right here, right? Where the market was going to go the opposite direction, and then we now closed underneath that. So when I see that, and I'm now like, okay, well, just looking from a monthly perspective, also just take into account that was the open of February right here, right? This candle where that order block is, that's February's open, January's close. We had April's open just like literally a little bit above that. And April's close just a little, just inside of that zone, right? So just seeing a lot of price action in there just off the monthly candles. So if I'm expecting a bearish price move from there, the question becomes where, like where would I expect a bearish move to, right? I want to know my entries, but I also want to know my targets. So I'm like, okay, well, where do I think that this monthly, drop can take us to? And again, pointing out on my other, this chart here, we have this whole bullish move, and this discount zone is where I'm kind of paying attention to, right? This is that zone. I mean, clearly can see we have a fair value gap in here, right? Last down candle, this up candle never came down back into this zone. I mean, you can consider that if you want to, but I'm gonna go from the clearest point for my eyes just to keep it simple, right? Boom, right? That's kind of that area of fair value that I'm looking for inside of this discount. Okay, easy cookings, right? Same thing you can see on this chart, right? Down into that. So go ahead and duplicate that. Right here. All right, now going down to the weekly. On the monthly too, you can. I just kind of like had taken a mental note of it, but you want to take a note of the highs and lows of these months as well. These last few months, right? So let's say last 3 months was February, March, April, and then of course you can say January because it was the top of the year. But last 3 months mostly, I could see that the open of February is where the order block is at, but the low of February was gone down there. So I can take that into account. And you'll see why these matter on a lower time frame. You'll see why that matters. Low of February. Right, and what happens is that these kind of become, I mean, when we go to a lower time frame, it's clearly a double bottom here already. You can see that, but they become areas of key levels. You feel me? Key levels. Like even just last month, identifying that this was the low of February. You can see that in April, they traded right to that low and rejected away, traded back up to all the way, at 101.6. feel me? So there's power in paying attention to those levels, right? Not just after it happens, right? Even right here, January's low, right there. And I mean, April's low clearly was here. I'm gonna just put February and April because I don't want to put so many lines on my charts right now. And then March's low as well was right there. Bang. And for kicks, even though it's type high, we put April's high right there, just to give us an idea what in the world is going on. What in the world is going on here? All right, so dropping down to the lower time frame, down to the weekly, we can see a clear downtrend. You know what we got going on, right? Markets up and up here, and we had lower low, lower high, lower low, lower high, and we just got ourselves a lower low, right? Just got ourselves a lower low. So either the market continues to fall, right, and gives us a lower low, right? But first, we've already seen it start to accumulate, pull back. So we want to see a pullback. We want to see a lower high, right? From that lower high, we can expect lower lows in the market. Now, that would be the ideal thing for us to look for. Now, on this weekly time frame, you can already actually see, okay, a couple different things, right? Y'all can hear me still? We good? Let me make sure this recording, because telling y'all, man, the recording antics be crazy. Be recording, and then after the thing you finish and it said, yeah, nothing. I'm like, boy, all right. Awesome. Okay, cool. So we can see a couple things already, just dropping down to the weekly. Let me get my arrow out so I can point accordingly. So we can see that when this drop happened, right, we dropped from the high of March here. It was March 6th. Oh, March 6th. Happy birthday, QB. Right? March 6th was the day that we got the high on the dollar. Okay? For the year. For the year. That was a very significant date in the markets, QB. All right? So we got the high of the year that they took off. They gave us then a drop. Right? They dropped down, and we saw them engulf. Here, this would be, I guess, that the top of the weekly order block right there. You would kind of take a note of that just for kicks and giggles. All right, boom. I'm gonna make it, I don't want it to be too prominent because I probably won't even keep it up there. I just want you guys to see it, right? But bearish order block. Weekly. All right, that's what we got right here. All right, and you can see the market drop below, kind of traded back up just a little bit. That's what the open of this candle was. Like, opened up, came up, traded back into it, and then we saw them fall off, right? And once they fell off, they came and took the lows, right, from January. So we got a lower low of the year here, April 10th. At that point, the market already, and now I'm going to delete this, right, because I think you guys see what I see already. I don't need to keep it there. We can see already that they gave the low. They came right under February's low, right? Traded immediately back up to the monthly order block, right? That's what the red line is. It's the monthly order block. They traded right back up into that. I wonder why we spending so much time on the weekly, and on the monthly. It's like this is the stuff that give you confidence when you trading on the 1 hour and the 5 minute and all that shenanigans you guys like to get into. You feel me? Like, you could do this once a month, like once a week. Shit, you could do it once a day if you really wanted to. That's that Kobe time. I'm talking about that extra time on the charts. But at the end of the day, it's like, just having these identified, look at how consistently we're rejecting from these key levels. And once they came up there above March's low, got a strong rejection, boom, got a strong rejection. Now I'm curious, right? This is a week where I should have less trading activity because there's so much news events, and I'm gonna get a good clear idea of what in the world is going on, right? Because it's either this is sufficient enough for us to reject from and trade lower, and from that we would take the correct response, or some way we're still going to trade back up into this imbalance before trading lower, right? And that's something to take into account. I mean, Loki got a baby fair value gap right up there, right? Last up candle. I'll use the wick. I could use the body, but just to keep it precise, right? I'm using the wick. And so that's that last down candle. We have this last up candle, and then that next down candle after the engulfing candle after order block was formed, and that gap was never really traded back into, right? And it's kind of got it sitting there. So that is something for me to keep in mind, right? That we can see the market trade back higher, and we'll identify once we come back to that lower time frame real quick. Lower time frame than this, but yeah, like, swept under January's lows all the way down below April's lows, traded back up to the order block, and then they wanted to reject down again below January's lows before trading back higher, coming back, closing above it. And now I'm pretty sure we can potentially can get a little bit of consolidation, because we're just in, like, this is just a very good area to mess people up. I can just already see it. So yeah, that's what we already getting from the higher time frame on the dollar. And then when we look at these lows, outside of the lows that they just formed, right? Because yes, they just gave us some sort of double bottoms here, right? We did see that, and so of course the market will be attracted to this. But we already pointed out on the higher time frame, this is the monthly fair value gap that we're interested in, and it's inside the discount, right? So conveniently, I'm going to pay attention to these equal lows over here, right? Sell side liquidity. All right, weekly sell side liquidity. Of course, I'm going to identify that just for my eye. I'm not going to leave it up there, but this is a fair value gap, by the way. Okay, so we could expect some type of reaction at that point, some type of rejection, resistance, right? But because of my understanding of what's going down under here, I could just, unless they make me a believer, I'll just believe that whatever is happening there is just an area to give us a place to rebound before actually doing what it is that we need to do. All right, cool. So yeah, that is just keep that in mind, right? That's why I want to kind of identify that FVG, but I'm just going to keep it in the back of my mind. Let's go down to the daily, and then we'll stop on the daily, I think. Right? So now we've come down to the daily. We've already identified everything we needed to on the higher time frame. We can see clear targets. I mean, just drop a one if you like followed along with what I was putting down and you got clear targets. I mean, this is the clear target, the weekly sell side liquidity. You feel me? So I put my magnet there. So anything in between us reaching there is, again, unless price action shows me otherwise, it's all just happening so that we can reach this area, right? And so that'll be my overall bias based off the monthly, the weekly, the higher time frames that we checking out. Now going down to the daily, right, we can clearly see, like I said, I can expect some type of consolidation, accumulation to go down in this area, because from the higher time frame, you could already see it was a BS area. Like, they're stuck between January's low, March's low, and the monthly order block. Like, this is just prime position for them to do nonsense. You can even see this once they drop down here on the daily time frame. They drop down below these lows here from February 1st. We saw that on the higher time frame. They dropped down, sweep, and they gave us the push higher, formed this bullish order block. They traded back down to that order block, gave another engulfing, now this is just nonsense zone. Right? Just nonsense zone that can happen here. Now I will take into account that we have all these unretrieved highs, right? AKA a trend line, right? That's what retail likes to call it, a trend line. I like to call it unretrieved highs. Like, no cap, and I'll just put it on these three because you can see that these we did come above and sweep. But yeah, either way, that's what I'm gonna do right there, just to keep us not confused. And I'm going to go back to the weekly and take these monthly lines off our lower time frame charts and above, just so that we have a little less clutter. All right. So yeah, on the daily time frame, I can see that's going on. Just because it's in play right now, I will take note of this bullish order block. All right, I will take note of that, and I'm gonna put it inside. All right, I'm gonna take note of that. Yeah, like it's chopped now. And from this drop down into that bullish order block, got this bearish order block at the top, and that's where you're seeing the consolidation and accumulation fill up. Just like that. So, beginning of the month, this is the first candle of the month, and I'm gonna peek at the 4-hour one time. Yeah, I need some more information, dollar. I need some more information, but we gonna keep that in mind, right? We gonna keep in mind we got this liquidity sitting above on the dollar. Nice imbalance gap up here that catches my attention. You guys probably noticed the gap here from April 11th, been there for a couple weeks now, right? So there is buy side. Indeed. So we gonna like BT said, we want the dollar to give us some more information. Now, just off of my experience, like just being like seeing this type of stuff play out, I like how we came down to the low of February and dropped down below that, shot up, created this what we know is an order block on a higher time frame, and they left all these highs here, right? They left all these highs intact, and they traded down, okay, back into that order block, swept all the lows, because this is the consolidation, right? This is the consolidation we talked about last Monday. What in the world, Maverick? Last Sunday for weekly market outlook, right? This is that consolidation, and this is where they broke under it, swept the lows. I don't know if you guys remember, I had smiley faces underneath this low, and I had smiley faces above this high, right? And I was like, I wanted to see them, of course. They swept the low here. They swept the high here. I feel now they can actually move out of this range. So what I like about it is that they did drop down into the order block here. They came up, gave us a higher high. Okay, gave us a higher high, dropped down, swept the lows, went into the fair value gap, retracement. All right, came down into this fair value gap. If I go down to a lower time frame, I'll be able to find the specific, candle, but came down into this fair value gap, swept, gave us a higher low though, right? We closed higher low, right? But just gave the sweep down into the bullish order block, right? Because on a lower time frame, this right here is your order block, right? They came down right to it inside the fair value gap. And all right, it's just like multiple confirmations inside one. Like that's how I'll be like this and then this and then this was inside this and this was in the box and a box and a box and a box. And like when that happens, I like it. And get the higher low. After the higher low in the sweep, they came up and gave us a higher high, right? The only thing I don't like about this higher high, of course, is the way that they on this chart, it doesn't sweep the highs. But on the proper futures dollar chart, which I don't pay for the full version of it, but on this chart, you can see that they did come up and sweep all those highs, every single one of them. Okay, so I gotta be aware now because I don't know who to trust. You feel me? Like, but on this chart, they did sweep every single one of those highs and then trade right back down into the nonsense, into the BS, right? And now we're seeing them trade back on this chart up into this bearish order block, right, on the 4-hour chart. So it's a lot of funky stuff they got going on right now. Given, like we said yesterday, just now at the beginning of the call, we do have dollar news tomorrow at 10 a.m. So we can definitely sit on our hands, let them show their hand up until that 10 a.m. and see what the market is looking like after 10 a.m. Right? If we have more clarity coming out of that 10 a.m. time as to whether it's up or down, we know our targets on both sides. We know our targets for the highs. Like I have it marked on this chart too. All these buy side liquidities that they have not, they've just left them intact. Right, that's where we have our dollar signs up here, right? So you can annotate those on your charts. But like I said, on this move here, you'll see on this chart, they didn't take all these highs from April 16th, that's 2 weeks ago, right? They didn't take all of them on this chart. They just came above like these two, left these guys intact, right? So, as far as I'm concerned, we still have a liquidity to go grab up there. So just off of me being in these situations, this looks very much like a bullish setup to me. Higher high, higher low, came back down, created the higher high here, swept, market maker buy model. They shouldn't come back below this low. They should come back nowhere near this if we're bullish. If dollar invalidates that 101.21 level, the low from Monday 24th, April 24th, if we run that area, then I don't see bullishness then. But there's no reason at this point, after forming something like this inside of what this is on a higher time frame, there's no reason they should come back, to that. So yeah, that's what I would like to see this week. Some type of way, see them, gain momentum, continue some type of momentum from that area. Honestly, on the hourly time frame, there's not much to stop it. This is just, one little order block here that's in the way and a whole bunch of imbalance. Whereas they just came out of all these confirmations that we just showed on a lower time frame. It's a lot of resistance down that way. It's a lot easier for the market to shoot past this high than it is for the market to go past this low, basically. So yeah, that's what I would like to see on the dollar. So for right now, I have an eye on bullishness for the dollar. But again, just like last week, we're going to respond to what happens each day. But I'm glad you guys was able to get that. All right. So from that understanding, that answers my questions for everything else that I want to look at. You feel me? I was trading UJ mightily last week. Lordy, man, I love BOJ interest rate decision. It's always an easy 200, 300, 500 pips, like when they come out like that. But this week I probably won't be as active on UJ because of how much I'm seeing those because of how many of those holidays we're seeing this week for UJ, right? But so I'm not even going to. But USD got a lot of news this week, so regardless, we could see UJ make a move. And just based off the monthly time frame on UJ, that bullish order block, bearish order block up here. All right, fair value gap, never traded back up into this gap. It's kind of clear, so I want to see them trade back up into that this month and get some rejections from there. So it kind of aligns with what I'm saying about the dollar, right? Would love to get bullishness on the dollar, just to recover those highs. A lot of that liquidity they have sitting, and then from there, of course, we'll see what the markets are looking like. But if they want to come lower, I wouldn't be surprised, of course, to see them come down into the same fair value gap the dollars, sitting above. All right, would love to see that sweep and trade higher. And I've already given you guys, the crypto comparison as well. Like, you know, in comparison with crypto, like, yeah, UJ just like UJ finna go ballistic. You know, we have had this bullish order block here, traded back into it, and then they're on a tear to attack this weekly buy side liquidity, and there's nothing in its way. Like, there's nothing there. Like, between where the market is right now and that's gonna get obliterated. And you know, of course, we can see what is attractive to us up here, right? So, I mean, yeah, bullish on a UJ unless the dollar decides that we ain't doing that. But as of the action going on here, that's the type of time I'm seeing for UJ. Probably will spend some time marking out like the highs of each of these months, like this high right here. Oh, there go that March 6th again. All right, there go that March 6th high. This is the high of the year that they are on a tear right now too. I mean, there's definitely plenty of liquidity up there. You can also see it's slightly a double top from the highs of December as well. So yeah, definitely want to see them, you know, run into that masterfully. I don't even at this point, it doesn't even look like there's a reason for them to pull back. it just looks like give us that high. So that's what I will say on UJ. The only reason I could see a pullback is because on the daily we are coming into this order block right here. They could annihilate that joint how they come in though. But if they did want to reject from somewhere, that would be the place. Coming back into here, right? Back into this bullish order block, right? See them trade back into that. And that's just around the 134.75 to 133.75, just in that 100 pip range. See them come back into that. Maybe even just come down, create a gap, and then trade into that and take off. Right, something like that. I would like to see if they're gonna come back from that. So if you see rejection from UJ here, and you wondering where it's gonna come back to, this is that level that I would be paying attention to, and then looking for buy opportunities in there to bring us above the yearly highs, like I said. Right, because it just looks like easy pickings, no cap. Yeah, like, I mean, like right now, right in front of our face is just like, yeah, I'm gonna go higher. So that's the thought on UJ. Man, such a beautiful move. Wow, Maverick. All right, so that is UJ. GU's ready to get. She's ready to get funky. I'm actually gonna go with gold. All right, so gold has been having a grand time. Let me see. Probably can delete some things. So, looking at the Lady Goldilocks to start the month off. Last month, bullish month, still on a tear to the highs, the all-time highs, and don't really see a reason for us to not still attack those. If they want to, this would be that could be a nice mitigation candle, monthly mitigation for them to play into, which is just another word for an order block just in the middle of a trend. So you can write that down. All right. Mitigation is the same thing as an order block. It's just in the middle of a trend. So like down here, for example, would be the order block. All right. Monthly bullish order block. All right. Because this small candle was engulfed by this next candle. And then inside of this bullish move, we had another order block where they pushed down to entice sellers, and then they took off again and engulfed it. So now this candle, this order block, becomes a mitigation candle. It's the same thing though. You feel me? Hope that makes sense. Hope it helps you the way it helped me. You feel me? So yeah, we, you know, worst case scenario, and it would make sense given we're looking for bullishness on the dollar. Like I said a couple weeks ago, I mean, don't be surprised to see the gold not correlating with the dollar. But as of right now, they still are not correlated, but they're inversely correlated, still going opposite directions of each other. So if we're looking to see a quick bullish move on the dollar, then it would make sense for gold to give a trade lower. So if they did, then I could see a fair amount of pullback back into into these lows, back into these fair value gap. This is a two-sided fair value gap. It was a gap on this side, right? When the market dropped lower, would have loved to see a trade into it and then reject, right? Nope, they just went straight past it and created another fair value gap, right? Boom, right? A bullish fair value gap now, right? So we can kind of pay attention to that 1900 area pretty much on gold for more bullishness if they are going to start just plummeting, right? And if they are going to just start taking nosedives, I still need to see let me delete these red lines. Yeah, I would still need to see like it's happening steadily, right? You can see daily, this was the highs, gave us the highs April 13th, gave us the highs, bearish order block here, and then the 14th, that next week on the 17th, they traded back into it, haven't traded back to it since, and we saw them trade lower, gave us another mitigation candle, pulled up, and then they dropped, gave us a lower low, right? So they came up, failed to give us any highs, right? Failed to create new, like, higher highs. We got a lower low, we got a lower high, and then they came through with another, right, bearish order block right here. Came through with another one most recently. Or maybe you would call it a mitigation candle. I don't care. I'm just looking. Right, boom, last up candle, back into this same action, wicks, and then they rejected heavy, engulfed it with these two candles. Next candle traded back into it, rejected. Today we traded back into it, rejected, right? Would love if gold would give us a lower low of some sort, right? Or at least close below where it's at. This was last week's open. This was last Monday's open right here. Would love to see them close below that and just give us a lower low so we can kind of, have something more to trade off of versus if they freaking come back up and they're just consolidating in this nonsense, right? So yeah, would definitely love to see that. And then same thing as the dollar, just on an opposite side, got a lot of lows that, a couple lows I would never take him back. And it's just like, wow, what a trend line. Sheesh. Somebody buying that thing. Like, what? That was from April 25th to March. For a whole month, somebody been buying this trend line. Ain't even taking profit either. They like, yeah, no, I found the magic. I'm gonna scale my account. Yeah, they about to rock that joint. They finna rock that thing. Whew, take that thing away. So yeah, that is my monthly to daily on gold. I mean, it's pretty clear cut. Only thing that would like again, if the dollar just shows its hand as being bearish, and gold also sweeps at least into these, you know what I'm saying? Like if gold at least sweeps a low and the dollar shows bearishness, then I would be like, okay, cool. Well, gold might, we might be ready for the bullishness. But if not, then yeah, I want all this to get taken back this month before we see them trade back higher if the dollar's gonna go lower, right? So that is that's my take on gold. Silver to back it up a little bit, maybe. All right, silver. Sometimes silver got more clear what they want to do, but at the same time they need a lot more silver for them bullish right now, right? So we got silver trading back up into similar area as gold. Silver's a little harder to tell for me though, because they already rejected above these order blocks, right, into that order block. So silver might be in a better position to go ahead and drop from, but we'll keep an eye on this. This is very nice. All right, that's a monthly order block they just traded into. Just swept the highs from from April whatever, the last time they traded into that, April 18th, right? Just swept above those highs and then gave us a bearish engulfing, right? Bearish order block right here. So again, I always like the box inside of a box inside of a box, right? It's always like just added super confirmations, basically almost like doing supersets at the gym, right? Like super confirmations. It's highly effective. You feel me? So got that order block they just traded away from, formed another one right under it. They traded back to that, rejected away from it, gave us a lower low. So again, actually, it's not hard for me to tell. I just spent less time looking at it than gold. It's the same exact thing, honestly, right? Again, here's that next order block. All right, order block inside of an order block inside of order block, and they rejected from the first one, rejected away, gave us a lower low, and then we gave a trade back up into it, rejecting from that now. But I mean, either way it goes, I just want to see how they're reacting. Like, I'm not gonna trade off of any of these. I just want to see how they react from these areas, and whether we get lower lows or lower highs. Do we get a higher high? Do they come and take these, the liquidity sitting above that, just at least one good wick, right? Which would make sense. It's FOMC week, NFP week, a lot of crazy ish could happen, right? Do we see gold just go for a launch, right? Or silver, I'm sorry, and gold go for a launch, take some of this, trade back into that order block one more time, and then give us the lower low, right? At least into this. Now, interestingly enough, on this time frame, can see that they have reclaimed into this gap a little bit here. They did trade into that a little bit and then reject away from it. So yeah, I need them to go ahead and give me some more intention. It's a little bit too much lackadaisicalness in this area when there's so much liquidity sitting around. You feel me? Because now you got them trading above this what they got going on here. Nobody got time. So gold and silver, I'm probably gonna be on the sidelines with them guys until they give me a little bit more clarity on what side of this liquidity they want, right? But UJ, super clear. Maybe last I'll look at, I love me some GJ, but I'm gonna leave her alone. Let's look at US30. All right, we'll do indices a touch and then we'll tap. All right, now indices. NASDAQ. Matter of fact, I'm gonna do NASDAQ because baby been going crazy. So with NASDAQ, only thing I'm going to point out on the monthly for real is the fact that we have higher highs, right? Higher highs just formed since September, August, right? And we are on a tear right now to attack that monthly buy side liquidity. Like, nothing in the way. Bullish candle closed. Like the last day of the month was the high of the month type of time in March. Okay. And same thing for April. Like the last day of April was the, or second to last, whatever, right? April damn near closed at its high. So they're just straight bullish strength right now on NASDAQ. And they have that monthly buy side liquidity taking its attention and attracting it. Right. So keep that in mind. We'll also keep in mind the high of the month of February here. Not February. Hello. All right, high of February, and they traded back into that high of February, April. Boom, traded back into it. And then we were gone. And didn't even come back. Dang, just dropped something. All right, and then boom, we'll also mark the high of March. Open and high of March, right? I mean, close. Right? Because these areas are important. We go down to the weekly time frame, and you can see it a little more clear cut. Right? Gave us the high, pulled back right back into that high of February, right? January 30th. I guess it was really literally the day of February beginning, but Yeah, they traded right back into it. I mean, even here, you could say that was the high of February if you want there. Even more precise, right? On the weekly. And they traded right back down into that high. And literally last week touched that thing and they was gone. Thing was beautiful. But yeah, so we had that go down. And of course we're gonna get a little bit of struggle. We had a little initial rejection from here because it's the past order block from when they dropped, but it's just too much. It's too much. It's too much bullishness, man. Like we literally closed bullish into the order block. Like literally, like this March 27th week, literally just Friday was the fucking high of the week, and straight into that order block. And so yeah, they gave a rejection, but there's a lot of bullish power coming in here. I mean, what do you expect? So there's that part, and then from the high to the low on, from the high of October 21st to 2021 to October 2022, that year right there. Right above this monthly buy side is our premium, where sellers would want to be enticed into the market, right? Right above that. So you got to think about it, man. If the sellers on the monthly time frame, those are the institutions, right? And so if they want to get those selling positions, what they gonna do to get themselves that something? They gonna buy. They gonna push the market higher. They're gonna sweep liquidity. They're gonna trade into their zones, right? And they're gonna attack from there, right? Weekly fair value gap right here. Beautiful fair value gap, right? Again, I love premiums and fair value. I love fair value gaps that sit inside premium and discounts. All right, love it. Love it, love it, love it, love it. All right, so that's the weekly. I mean, that's the weekly for us on Nasdaq. So yeah, so just so aggressive the way they're moving right now. And then right here, the week before last candle, right? That formed an order block. That was the last down candle before they traded into February's high, and then they took off from there, right? So the top of that candle is our current order block that I'm paying attention to, right? I mean, you can even pay attention to this whole area, right? Because that's the close of March, and this whole move was the move down. I mean, you can't see it as clearly on the monthly, but yeah, on the weekly, you can see that whole thing is kind of a drop, right? That whole thing is initiated drop, but we haven't revisited that yet. So that's why I'm like, I'll pay attention to both areas, you know. Like, depends again what time we come to these areas. I don't need to focus on prediction. I'm just telling you these numbers are great. At 13,193, right, was the close of March and high of March. You feel me? And if we come into that area at 9:45 a.m. on a Tuesday, yeah, I'm gonna buy. Right, and then if they decide to drop the whole rest of the day, I'm gonna take my 1 to 3, and if they drop the rest of it, I don't care. When they come into this area at 9:45 in the morning again, I'm going to buy. And that's just the reason that I spend so much time on the higher time frames, identifying these important areas and then just executing from them. You feel me? So yeah, we actually did already reclaim that order block because I traded that. So let me actually go ahead and recant my statements. Right, so you can see on the weekly time frame, there's that order block for us here. Right. On the weekly. On the monthly, on the weekly, we never seen them trade back into it, but on the daily, right, and every time frame below, you'll see that on Friday, we actually did trade right back into that order block, right, and then take off from it. Okay, so again, it's just really the time that matters, right? I believe that was in the PM set. No, that was 9 a.m. Again, 9 a.m. on the dot. We traded into a weekly order block. I'm gonna buy. I don't need to do too much talking about it. You get what I'm saying? So that's what I'm kind of putting down for you guys. And we have another one to pay attention to, which we're above right now, which is this high. If I go back to the daily and make it clear for us, or the weekly, I think, make it clear for us, right? That high here. So yes, again, we've already traded black back into this one. They've traded higher above this order block. So again, depending on what time we trade back into this one, that'll give me an understanding of like how to, because I used to not be able to trust like buys this high. You'd feel like, you feel like, oh my gosh, I'm tracing the trade. Like they took off from down here. But by identifying these areas and just taking trades based off of them at certain times of the day, it makes things a lot easier. Especially like I said, we have the monthly buy side up here that looks like the clear target in my opinion. I don't even know where my magnet is at, but we're gonna put another one. All right, so I have that identified, but the reason I have this black line right above is because this on the daily time frame is an area of resistance, right? An area of potential rejection, right? Because it's the last move before we created that buy side liquidity before they dropped. This was that last buy up, right? So I'm just paying attention to how the market can react to that zone. Maybe that's what gives us our pullback in London session to come back to this red line. And then on a lower time frame, I would just time it to where I get myself a better entry, better positioning, etc., right? Boom, on a 4 hour, I could see got this nice fair value gap on the 4 hour time frame. Inside of that, and from there down to here is about 80 pips, consummate, whatever he calls that thing. It shouldn't come below that. I'm not gonna try and explain all this. All right, that in itself could be a 50 to 80 pip stop loss attempt for 130 for a TP1. Can't see up into all that on this time frame, so I'll keep that in mind on NASDAQ this week. Keep that in mind. Let's see. I'll put that there. Right. And I'll leave that there for me to analyze. Yep. So that's what we're going to be paying attention to this week. That's what we're going to be paying attention to. Hopefully we can be done, but if we could be done before Wednesday, I'm good. I'm good off NFP. I'm good. If we could be done by Wednesday morning, I'll be happy. We can come into some of these zones that I talked about today at the right time. Give me some double bottoms or something, on a lower time frame, so I can get me a small stop loss. That would be nice, and just keep it simple. No mess games this week. Somebody tell the charts, because they ain't got the message yet. No messy games this week. You feel me? I don't want none of that. I don't want no violence this week. Let's just be cordial. Let's keep this game clean. Somebody tell them I sent the message. You feel me? But yeah, that's what we got going on, guys. If anybody got any questions, but that's what we got going on. May 1st, weekly outlook for the month and the monthly outlook. Kind of the ideas we got going on. Like I said, of course, still long-term think we got room to go bullish on the dollar, take those highs on 115, but right now, I definitely see some lows that could get taken. So let's see if we get a lower high, this week or the week after, so they can trade lower, and go get some action popping. Other than that, we'll be back live next Sunday at 10 p.m. and I will be in this thing on Tuesday morning at 8 a.m. And if anybody has any questions or wants to go over anything, we got Q&A tomorrow, Monday at 6 a.m. I made the event in the Discord. You gotta go to the Discord. You gotta click interested. If not, then I'm gonna assume nobody needs it, and I won't do it. So I'm not tripping. So yeah, that's how you can let me know if you need that session to be there. But yeah, man, appreciate y'all, and yeah, I'm gonna end the recording now.